Perth property prices are expected to soon soar past Melbourne's.
There's lots of indications that the downswing phase of the cycle is upon us. You've got rising stock levels and fewer buyers than this time last year.
No doubt about it, it could be a buyer's market, especially in Melbourne and Sydney for some people.
Higher interest rates, a shortage of homes, a booming population. They've all triggered a housing crisis in large parts of Australia. In Sydney, average house prices are 13 times the average income, leaving many out in the cold. But now, prices are falling in both Sydney and Melbourne. Have we finally reached a turning point? Hello, I'm Rebecca Jones. Welcome to the Bloomberg Australia podcast. Today on the show, it's the one topic that's guaranteed to light up every barbecue this summer. Yep, we are talking house prices. Where are the national hotspots, the weak patches, and what we all really want to know, when are mortgage payments going down? To help me do that, I'm joined by Sydney-based economy reporter Swati Pandey. Swati, welcome back.
Thanks, Beck. Looking forward to this chat.
I'm looking forward to it too. Now, you have been very, very busy following every twist and turn that's happening with our central bank and also on the pickleball court. Explain.
That was really exciting. It was the highlight of 2024. I played pickleball with tennis legend Andre Agassi. I was his doubles partner, but I also played against him.
Amazing. And you wrote about it for Bloomberg, and you can read Swati's story on the rise of pickleball on Bloomberg.com. But today, we're talking about my favourite topic, and I know it's yours too. We're talking about house prices. Last time you joined me on the podcast, it was back in October, and you'd all but given up on buying your own home or upgrading your own home in Sydney. What have the prices in the harbour city done since we last talked?
At that time, we had seen a slowdown in the momentum in price growth. And now, finally, we are seeing price falls in Sydney. So prices in Melbourne have already been falling, and Sydney has now joined its ugly sister. And November was the first month where prices in Sydney fell since the start of 2023. So whether it's a start of a new trend or a blip, only time will tell.
So prices have started to fall in Sydney, and in Melbourne, they've now slipped for 10 of the past 12 months. What is happening in the other major cities, Swati?
Other major cities are going gangbusters. Again, price growth has slowed, so it's not rising at the same pace as they were at the start of this year. But Adelaide, Brisbane, Perth, they are still pretty strong. Perth is the strongest. Canberra is growing well too. And that is what is pushing national prices up. So we are not seeing a drop in national prices yet, but the growth has slowed.
What is behind the falls in Sydney and Melbourne? They're our biggest housing markets. And is it just that they're feeling the impact of nearly 2 years of these high interest rates, or are there some other factors in play here?
You've hit the nail on its head, Beck, with affordability. So that is definitely a key factor, especially in Sydney, where prices have grown by a lot. So I'm looking at CoreLogic data right now. In Sydney, since the onset of COVID, prices grew 29%. In Brisbane, it's 67%. Adelaide, 71%. Perth, 77%. Melbourne is the smallest gain of just 9.5%. But we're still talking about like really strong price growth in just these 3-4 years, right? So affordability is definitely a constraint. Combine that with high interest rates, 13-year high borrowing costs, and expectations that interest rates will remain at these levels for some time to come. It's kind of giving people a bit of jitters and preventing them from taking risks in the market. So that is the biggest reason in Sydney. In Melbourne, we are seeing slowdown in the economy. So Victoria, the state of which Melbourne is the capital. So Victoria State is amongst the weakest state in Australia as far as economic growth is concerned. They have had they had the longest COVID lockdown, right? Like you're in Melbourne, and people in Melbourne really suffered during that time. And when the lockdowns lifted, since then, the economy hasn't really bounced back, whereas Sydney had really short, small lockdowns. And when COVID we came out of COVID, the economy really bounced back. So Victoria is mostly a slowdown story, unemployment, and that story, whereas Sydney is more an affordability story.
What does this mean for affordability more broadly now that the prices have started to come down a bit? Is it going to be enough to open up the market to new buyers, particularly these like first home buyers that are just trying to get their foot on the property ladder? Or is this just going to be around the edges compared to some of the massive growth we've seen in the last couple of years?
Yeah, it's the latter, Beck, as far as I understand. I mean, we are talking about increase of 29% or 70%, right, in markets since the onset of COVID. The falls that we are seeing is 0.1%, 0.2%. So if you look at the broader picture, if we zoom out, it's really, the fall much. Is really nothing. Yes. Prices are still really unaffordable. In Sydney, the median home value is still at record highs. So if you are a first home buyer looking to buy, it's still going to be a big decision. Hard one. That
really puts it into perspective, a very sobering perspective as well too. My next question really, off the back of that is, are we zooming in too closely into these data sets that come out to be able to predict whether or not this downturn that we are seeing is going to take hold in both the two biggest cities, Sydney and Melbourne? Swati, what are the economists, what are the analysts that you talk to saying about that? Is it too early to tell whether or not these first home buyers, these mortgage holders are going to have some sort of relief anytime soon?
Beck, I have lived in Australia for 10 years now, and I have covered housing market in all of those 10 years. And every other year, there is a prediction that Sydney bubble is going to burst, especially around this time of the year. People make predictions for the next year and say that, okay, Sydney house prices are going to fall. Never has happened.
Is it just something we tell ourselves, right? Potentially.
It's a wishful thinking for sure. Look, the broader fundamentals that we spoke about last time remains, right? We still are in a market where supply is in shortfall. We still are in a market where population is growing. People still want houses. People still want good quality apartments, good quality construction, good. So, I mean, that supply shortage is still there, and we are nowhere close to building enough homes. Even if we talk about the end of the decade, we are nowhere close to building enough homes for our people. So, just fundamentally looking, our price is going to fall. Unlikely, and especially the central bank is expected to start cutting interest rates in 2025. So if anything, things could get better, even better or worse, depend on how you look at it.
And when we come back, what the re-election of Donald Trump could mean for your mortgage payments next year. And welcome back to the Bloomberg Australia podcast. You're here with me, Rebecca Jones, and my guest, economic reporter Swati Pandey, who's based in our Sydney newsroom. We're talking about the outlook for Australia's housing market, and we're trying to answer the question that all homeowners and potential homeowners are asking: when are we ever going to get a rate cut? Swati, across the ditch, we've seen New Zealand's central bank slashing their interest rates, and there's even an expectation of another 50 basis point cut early next year. What has been the impact on the property market over there?
So New Zealand's housing market has actually acted more like a normal market compared to Australia's. So their property market is kind of in a moribund state at the moment. Their economy is in shambles. Unemployment rate is rising. They also took interest rates much higher than us. So their interest rate peaked at 5.5%. And their people are really hurting, and so is their housing market. There are predictions from economists for prices to increase over 2025 between 6 and 11%. So they are looking at the brighter side now with interest rate cuts beginning in earnest.
And with all those cuts in New Zealand, what are we expecting from the RBA when it meets in December, other than, Christmas cheer?
No Christmas gift from the RBA, unfortunately.
Nothing under the tree from Michelle Bullock. Not this year.
Yeah, we are expecting more of the same from them. So interest rates are expected to remain at 13-year highs of 4.35%. And the language around their statement is likely to remain the same as well. In fact, Michelle Bullock spoke at an event at the end of November, and she repeated her hawkish language. And she spoke about why we are different. For example, Australia did not take interest rates as high as other countries. So we are not as restrictive as other countries. But also our economy is proving a lot more resilient than other places. Our employment market is pretty strong. Unemployment is still low. So there's a lot going in our favor. And so it's not time yet to cut interest rates.
And as I mentioned just before we went to the break, Donald Trump's re-election in the US also may have some impact on when our central bank moves, largely thanks to the tariffs he's planning to impose on China, who is our biggest trading partner and indeed many countries' biggest trading partner. Jo Masters is the chief economist at Barrenjoey. She was talking recently on Bloomberg TV about this. Let's take a listen.
From our perspective, we are very concerned about the potential growth hit to China from Trump's policies, and particularly tariffs, but more broadly. And of course, Australia as a small open economy is incredibly exposed not just to China, but to Asia Pacific more broadly.
Swati, local economists have been pushing back on the date when they expect the RBA to start cutting rates. Can you unpack that for us?
Yeah, so there are two things going on here. The first is that in the US, after the Trump election, there is expectation that US Federal Reserve will cut by less than what was previously expected. And that is because Trump's policies are expected to be inflationary. So we are talking about more government spending there, tax cuts, and higher tariffs, like you mentioned. And all of that is inflationary. And some of that inflation could get exported. Some of that inflation could get exported out of the US to other countries. And the second is Australia's domestic economy, which is proving quite strong. Our unemployment rate is below a lot of other countries. Our labor market's pretty strong. Government spending is boosting economic growth, and we are heading into elections, so more government spending. And all of that means inflation remains high and the RBA remains at bay.
I'm trying to end this on a positive note, but what we've talked about so far isn't filling me with a lot of optimism as we head into 2025. We've seen the prices come off in both Sydney and Melbourne. Melbourne has been happening for quite some time, as we've said. It's still coming off a very high base, and those fundamental problems, as you've mentioned, Swati, still remain about affordability, supply, and also our population growth. The jobs market's held up pretty well, given the RBA is still trying to get inflation to a band. It feels comfortable enough to cut in. Are we going to expect any sort of relief in the first half of 2025? What are the experts telling you?
Look, expectation is that the RBA could cut in February. We have inflation report at the end of January, which is going to be really critical. Everybody is going to keep their eyes peeled for that one. If inflation is weak and it is within the RBA's band, which is 2 to 3%, RBA could cut in February. The consensus is still divided among economists. So some are saying February, some are saying May. So irrespective whether it's February or May, first half of the year, we could see some relief. The bad news is that it's not going to be a series of cuts. So the easing cycle is going to be small. It's going to be shallow.
At least it's something to look forward to pick our hopes on. If not, I think we go halves and we invest in a pickleball back company or something a little bit more sensible than a 3-bedroom apartment. Swati, it is always a pleasure to have you on. Thank you.
Likewise, always a pleasure. Thanks, Beck.
And thank you for listening to the Bloomberg Australia podcast. I'm Rebecca Jones. This episode was recorded on the lands of the Wurundjeri and Gadigal people of the Kulin and Eora Nation. It was produced by Paul Allen and edited by Chris Burke and Ainsley Chandler. Don't forget to follow and review the show wherever you get your podcasts and sign up for Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.